Boom! What's going on, guys? Welcome into your energy news beat here on this gorgeous Friday, February 12th, 2021. We hope you're staying warm out there. As always, I'm your humble correspondent, Michael Tanner, coming to you from an undisclosed location here in Denver, Colorado. As always, joined by the executive producer of the show, the purveyor of the show, and the director and publisher of the world's greatest website, EnergyNewsBeat.com, Stuart Turley. You're in a deep freeze in bear country, it sounds like.
It is. Everything's iced over. Had to put the golf cart in, and about broke my bahunkus.
So not to tell what's here. He's obviously Stu's using a green screen because it don't look like that outside. It's good. No. It's a good view, but guys, we really appreciate you checking out the show today. You can check out what we have coming up and a bag of chips to my left there. But first, guys, just thank you for subscribing to the world's greatest YouTube channel, Energy News Beat. Hit that pesky subscribe button. If I was a 16-year-old making millions on YouTube, I would say smash that like button, but I will refrain from saying that. Continue to subscribe to our one-click notifications via the world's greatest website, EnergyNewsBeat.com. It's legit a stream of consciousness of news. If you're like me and need an IV of coffee every morning just to wake up, well, we'll hook you up to an IV of news and get you everything you need. When we look at what happened, let's just go ahead and start top line indices. Pretty much, flat for the day. SPY was up 0.3 of a percentage point. Nasdaq trading 0.2 of a percentage point. Dow Jones pretty much finishing flat. Major quote out of Dennis Busschere. He is the macro research analyst at Evercore ISI. He says, "Is the path to much higher equities becoming smaller, or to put it differently, are the bulls attempting to thread the needle? Seems that way in the near term." And what he means by that is, are the bulls trying to squeeze out as much profit as they can before they continue to dump shares? Shares of Disney actually erased gains after they reported 95 million subscribers. Another thing that I thought was very interesting was that Joe Biden announced on Thursday that the administration had secured deals for another 200 million doses of the coronavirus vaccine for both Moderna and Pfizer, bringing the total U.S. to 600 million. That means we will have enough to vaccinate everybody by July. Stu, I'm not sure if you'll still get in line for that one. But the other thing that we saw today happened was House Democrats were able to pass a portion of the stimulus bill that included $1,400 direct checks to people making under $50,000 and phasing out as you get to $75,000. So, market likes the stimulus news coming out. Remember, they're still going to have some trouble in the Senate due to some reconciliation stuff. I'm not a policy guy, but apparently there's this thing called budget reconciliation where you don't need the full 60 votes as long as you pass it as a budget requirement. It just has to get through the budget committee and then just an up and down vote in the Senate. So, we'll let smarter minds prevail. Tea leaves read. Looks like we should have checks coming out soon, so market's going to like that. I'd buy Amazon right now if you could. When we go ahead and look over the crude oil side, the bulls are back in town, baby. 59.60. High today was 59.82 for that WTI front month. Brent crossed 62.50. Currently trading 62.65, back into the WTI curve 55.83. I mean, as the dollar continues to become weaker and weaker, oil will continue to chug up, and that's really what I'm looking for. If you just chart dollar strength versus oil, it's they're going opposite, which means, if this trend continues, the more money we see pumped into the market, the more oil will continue to creep up and up. Rig counts came out today, +5. Does this mean we're going to continue to see rigs getting added? I don't know. So we'll kind of cover a lot of that. I know Stu talked a lot of that on his webinar yesterday. I'll let him kind of talk about what happened on that as we get up to it. Let's go ahead and move over to natural gas. It chunks to $2.91, up 1.7% off. Just frigid temperatures all around the U.S. It's about 10 degrees where I'm at right now. Stu's over in bear country. Who knows what it is out there? It's going to take people too long to get to them. Back into that natural gas curve, $3.06. We're looking at weather trades right now. Stocks came out yesterday. We were looking for something above 200 BCF in terms of a draw. We only saw 170, so I think that's tempering markets, but these colder weathers are going to continue to drive prices up. No doubt. XOP was on E&P Securities contract. That's up 2.5 percentage points, currently trading 75.53. OIH, which is Oilfield Services contract, 180.91. That's a 1.3 percentage points on the upside. Some movers on the downside, even though we did see a positive day for equities. High Point Resources, they're down 4 percentage points. Telrinian, they're down 5. American Resources Corporation, they're down 5%. And U.S. Energy Corp down 11 percentage points. Let's go ahead and turn to the upside here. Good numbers here. Terra Resources, they're up 8 percentage points. Marcellus gas player better be up. CDEV up 9 percentage points, $3.50. Peabody Energy, a coal producer, they're up 12 percentage points. And Contango Oil and Gas all the way trading up 14 percentage points. Stu, internationally, what do we got?
Well, it's almost a calm day. First story out of the box, we had a hydroelectric disaster in India. We're so sorry for this. Hydro power dam faces backlash after Himalayan flood tragedy. 34 people passed, and we're sorry about that. But the deluge was triggered by a glacial burst near a hamlet in the hydro station. Some interesting tidbits in this article. India's hydroelectric is 14%. That's a big number. However, you take a look at their coal, and their coal is 40%. And we know they're trying, 14%. And 65% of their electricity is right now generated by coal. So they are really trying to move away from that, and I'm sorry that a accident happened to those wonderful folks on that dam. Okay, here we are coming around the corner here, and Macquarie does $2 billion. This fund is a $2 billion fund for around the world for 25-year closed fund, which will put wind and solar projects in Western U.S., Canada, Mexico, Taiwan, Australia, and New Zealand. Michael, I think it's kind of funny that here is this $2 billion fund, and they're leaving out one of the biggest markets that's in there, and that's the emerging market of India. You think you'd want to go get that market, but just me.
Yeah. Okay. I mean, you're not going to be able to supply all of India with just solar and wind power. I mean, you know, we got to raise a solar fund, I think, Stu. I think that's the next move for the show. The Energy News Beat, we are opening up a renewables fund. If you've got cash and you want to invest in a renewables fund, my pockets are open. We'll find you some low IRR, very long payout projects to get into.
Okay. They're passing the government stimulus or the tax credits for wind and solar. So it looks like that's coming in. I'd rather give my money to Jay over at King Operating with good money, good management.
I'd rather flush my capital down the drain than invest in a solar project.
You'll get your money back with Jay.
I'm talking about solar products. Jay Young, go invest. At least he's buying oil.
Oh, yeah, the son of a gun is good. Okay, here we go. Are you ready for this one?
Shameless.
This one made me airsick. Okay, Russia has won the oil war. The EIA, the United States, the EIA forecasts the U.S. will return to being a net petroleum importer. When, Michael?
2021, I think is what it said.
This year. That stinks. It didn't take long, and that is really horrible. The net import is going to come in, and our friend up in New York is going to be one of the ones that the average price per kilowatt hour is going to go up, and the poor people are going to pay for it, and that's the worst part about it. So we got a hall pass.
Yeah, no, we're about a couple stories away from a hall pass. We got to quickly cover rig counts here. +5 for the U.S. Canada saw an increase of 5. International saw an increase of 12. And we're currently sitting at 397 rigs. And that's why you're going to see us become a net importer. We had this question on Twitter this morning. Why, with oil coming, why are we becoming a net importer when we continue to produce at the same levels? Well, the problem is wells die off so quickly. It's at least conservative 400, 450 to 500 rigs needed to sustain our current level of production by how quickly wells decline off. So if we can't get to 450, 500 quickly, Stu, that's what the EIA was predicting right there. They're saying we don't think rig count is going to shoot up quickly. I agree with that. I think operators are going to have lessons learned. I think they're going to take this higher oil price, not try to produce more, and just really see if they can line their pockets. Stu, I don't go look at your electric bill, because your electric bill yesterday was going to be wildly expensive. According to, let me pull this up here. One Oak Gas Transmission, which covers Oklahoma and the Oklahoma trading point, because of the cold yesterday, saw spot prices for natural gas rise to $600 $100 per million BTU as snow, ice, and sub-freezing temperatures have scattered your region. Get this, Stu. By Friday, there was no transaction executed below 125. If you go look on, I have a picture, if you have a terminal, go look at Oklahoma spot price. Ding, 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 ding. Whoop! Don't go look at it. It's going to be very interesting. We're going to get you to show your electric bill day by day next month because I'm really interested in what yesterday looked like.
I got a hydroelectric dam right over there, and that's where I get my power.
Oh, so you're good. You're not even hooked up to the natural gas line? So Stu's the OG renewables guy. He's the oil and gas by heart, but he's in the renewables. I love it. I didn't know you were on hydro.
I'm on hydro, baby. I
You're
love
on everything
over
there. So I guess not. Well, find one of your neighbors. I want to know what the spot prices are because I'm super interested in what a bill looks like for somebody over in Oklahoma. If you're an Oklahoman watching us, please send us in your electric bill for this month. Highly interested. We'll send you some free swag.
Yeah, but that's why I'm a Texas resident because I live in Texas.
Ooh, interesting. Hopefully the IRS isn't listening. We got two stories on the back end here to cover. First, we're going to go a little north of the border here. I'm going to swipe a little bit from the international news that there is a Montey, which is the Permian of Canada, little M&A deal. We talked about, Seven Generations, which is about a $2.7 billion oil and gas Montney producer. They have just announced that they are going to be acquired by Arch Resources, which, values them at exactly that $2.74 billion. They're going to get 1.108 shares for each of the Seven Generations shares. Marty Proctor, CEO of Seven Generations, quoted, "When discussions were first initiated, we saw that the combined entity would have the scale and high quality asset base that is critical to remaining competitive in both the transitional energy industry and the evolving capital market space." He said he was proud of what they've accomplished at Seven Generations in a relatively short amount of time. Seven Gens was founded in 2008 while Arch began back in 1996. Cost synergies, yikes, that's $110 million a year by 2022, which means less people. They're going to continue to pay Arch quarterly dividend of 6 cents a share. TV guys, an idea. Arch chairman Hal Kizik and CEO, I forget what his name is, something Anderson. He's going to continue to stay in that role. 7gen CEO Marty Proctor, he's actually going to become the vice chair of the board. So nice little payout. I have little experience up in the Canadian world, but from what I hear from my Canadian friends, 7gen is a good company. 7gens so this is, a good deal for Arch. I'm a big fan of what they're doing up there. But if you are in the Canadian finance space, let us know what you think of this deal. Just the tea leaves I'm reading is that things are good. Stu, any thoughts on this deal?
I like them. I think the management's good and good management, good numbers.
Yeah, we got to put that on a mug or something. Last one we got for earnings this week before we absolutely explode next week. Noble Midstream earnings. Remember, guys, Chevron came out and announced that they were trying to buy out the rest of this share. So they use an idea. Here's what they're trying to get in on. $40 million of net attributable income to the partnership, $85 million in net cash provided by operating activities. They self-funded $7 million in net organic capital expenses. I'm our guy of the week. Right here. Well, I wasn't sure what it was. Self-funded $7 million net organic capital expenditures. Where are we going? It's vegan. We're now going vegan capital expenditures. Unbelievable. Who's the IR guy on this? They're definitely going to have an IR guy on here. He wins. I was really looking for who was going to win. I didn't know who was going to be IR guy of the week until right now. So this is why you just trust the stuff. This is a long press release. Here we go. IR guy. Park Karari, good for you, man. Good for you. Net organic cash from operating activities. I'm full from saying that. I almost feel skinnier just saying that.
We're going to put him in IR guy for the month running category.
Well, we're gonna go back and do like an IR guy of the year. We'll hold a big ceremony. We'll it's a $100,000 cash prize. It's a pretty big deal to win this. But that just kills me. $7 million in self-funded net organic capital expenditures. If you're wondering what that means, I have absolutely no idea. But they did gross about 268,000 barrels equivalent a day and about 146,000 barrels of produced water a day. They delivered 89,000 barrels of produced fresh water, and they're going to invest anywhere between 155 and 185 in net income next year into capital expenditure. So again, this is what Chevron's trying to get in on market. They're up about 2 percentage points. They like the stuff. I mean, it's just limited partnerships. If you're part of the partnership, you're going to do well. If you're part of the shareholder base, not so much. Stu, before we give him a hall pass, we miss anything this week, man? Busy week.
Busy, fantastic week. We had lots going on. We had a successful production with a investors conference. We had a successful webinars. We've been just jamming with news. Got a lot of good stuff going on.
We did have a conference this week. We survived, thank goodness.
I had to talk you off the ledge.
Multiple times. To shout out Connor McCarl came into town to help us. Or I would have jumped off. We wouldn't have held the show. We would be a new co-host. We'd have Connor in the seat. With that, guys, we're going to let you get out of here, get back to work, finish up your day. You have a hall pass now. Appreciate it. For Stuart Turley, I'm Michael Tanner. We will see you guys till next week on the Energy Beat.